All right, my friends, so just reading from Seeking Alpha that the Fed is looking like raising rates 4 times this year. I just, you gotta be kidding me, man. And I know the market is reacting. I don't know when, look, I don't follow the Fed. I mean, I listen to what my man, uneducated economist says, and I read, obviously I read, but, the Fed, Schmed, I don't, it is what it is. So I don't sit there and say, what is Powell saying? Did Powell take a number deuce or did he go number 1 this morning? I just don't care. But I do know that they've been telegraphing that they're going to be raising the rates. And they've been doing that for more than just this last week, for heaven's sake. But let's be clear. If the Fed does actually raise 3 to 4 times this year, and we're talking usually 25 basis points a pop, the level of chaos that's going to create in the markets, bonds and stocks, are going to be insane, I would think. Now I get it. NASDAQ is already well below well below a correction territory. Could go way below that as well. But there is a reason we have the mantra, don't fight the Fed. Now, I'm just telling you, for those of you who go into bonds to protect yourself, bond markets go down when the Fed raises. Just look at 94, 99, and I want to say 2013, but it wasn't much. I just can't remember. 94, 99. Fed was explicitly raising rates, bond prices fell, and you had bad years, not stock-like bad years, but just bad years for bonds. So be prepared. It's okay. If you look at the following years, when the Fed doesn't raise and they level off, the bond markets freaking take off. Now, will that happen again? I got no clue. But the idea that the Fed is going to raise rates in this economy, now, even if it's a balance sheet recession, which I absolutely think it is, which is why there's a true deflation other than the insanity of government policy, and there will continue to be a true deflation, a balance, just, look up balance sheet recessions. People aren't borrowing. But even if it were a balance sheet recession, there's still a crap load of debt out there. If that is put into higher interest rates, you're not going to make it back on your bank deposits, that's for doggone sure. But if that's put into higher interest rates, that means there's going to be less profits, less positive cash flow, more debt servicing. And we're talking 25 basis points on, and I'm not sure what short-term money's doing right now. That's a pretty significant raise. I can't remember what the federal funds rate is, 50 basis points, something like that. So a 25 basis point increase in short-term lending, short-term rates, is a 50% increase in interest rates. I mean, what is that going to do? It just is stupid, man. Now, this right here, in of itself, the reason I'm not all that worried from an economic perspective is because I don't know, man. I do think we are in a Japan-like economy where people are hesitant to borrow. And as such, I don't think that raising of the rates will be as detrimental as it was when we're fully leveraged in 94 and beginning 99. But it might be, I don't know. My own perspective, did I take the wrong turn? My own perspective is that and this is just me, my own thoughts and the people I talk to, people are not as leveraged as they were, and people are not trying to be as leveraged as and the reason is because coming out of 2008, I think a lot of people learned the lesson, as I did, as you probably did as well. Now, this just might be in my own little bubble, I'm not going to lie to you. I don't know if that's true or not, I just don't know. But I have a sneaky suspicion it is, and as such, the raising of the interest rates won't create itself economic chaos for a lot of people, but it certainly could for those who are highly leveraged, stock traders, all these people who are, banking, highly leveraged. That could be a problem, and that does affect the overall economy for sure. And what will happen, of course, is whenever they raise rates, stocks and bonds both fall. And I would expect that this is just beginning. If this could, it just is nuts to raise rates into this kind of economy. But this is where economics just screws up. They think that the inflation's bad, so we got to raise rates to stem the growth of the economy, economic output. It's freaking idiotic. This is why I harp all the time, why freaking you don't understand how inflation truly works. So you think Fed, Powell, Greenspan, and then half the freaking viewers here, you think that inflation nips inflation. You think that inflation is beaten back by the raising of interest rates because that's what we've all been told. Paul Volcker. That's what happened the 12 years previous to that. What happened in the 70s? They weren't raising rates to nip inflation? You've never heard of whip inflation now? And they're raising rates, and that didn't whip inflation. Why? Because policy. People were on policy freaking crack. Government policy, price and wage controls, Nixon. So it wasn't the raising of interest rates that beat inflation. And thus, it's not going to be the raising of interest rates now that beat inflation. All this is going to do is bring more economic chaos. It's so flippin' frustrating. And just because people just want a solution. They want, it's like the CO2, we have this knob. Turn CO2 up, this is what idiots think. You turn CO2 up and the temperature goes down. So human beings are going to turn CO2 down by getting rid of fossil fuels, and that will make the temperatures go down. It's so freaking arrogant. And it's so flippin' condescendingly stupid that people fall for it. So, inflation's through the roof. Let's turn on the interest rates. That will stem the growth of the economic output. And you're like, are you freaking idiotic? The economic output isn't there. The reason inflation is there is because of the freaking mandates, because of policy directives from the government. I tell you, man, it frustrates me. And of course, but Josh, all the economists say with their vast majority of Paul Samuelson mathematics, I'm like, I could give two craps about that. What I care about is the reality. And the reality is that there's going to be some pain if the Fed raises the rates 4 times when they're already on, again, I don't know what the Fed funds rate is. Is it 25 basis points, 750? I don't know, but it's low. If they raise the rates 25 bips a pop for 3 to 4 times this year, we're going to suffer. We're going to suffer. So just freaking, guard the hen houses. All right, we'll see you.